2017 is ending. In fact, FY18 for India is just about 2 months before it ends. And 2018, FY19 for us starts. It's a good time to take stock of where the world economy and the Indian economy will head in the coming year. I have with me someone who is best placed to assess both the global economy and the Indian economy as well. I have with me the Chief Economist of IMF, Maurice Obstfeld. Maurice, thank you very much for joining us. Well, first up, India versus the globe argument. India has grown below trend this year. We were cruising at nearly 7% up until last year, even over that. This year, calendar year, has been particularly bad. Exactly the year when world economy has grown better. Would you say this is an aberration?
I think it is an aberration. There were two big policy events this year in India. One was the demonetization, and the other was the introduction of the GST. Now, both of these policy changes carry long-term benefits, but in the short run caused some disruptions. The demonetization to households and small businesses, the GST, just people getting used to it, ironing out some initial glitches. For this year, we expect growth in India to be 6.7%. For next year, 7.4%, more in line with past performance. Though we view the long-run potential, assuming economic reforms progress, as more like 8%.
Okay, or 8%. Well, we are also waiting for that number. But do you think, therefore, the GST glitches get ironed out pretty quickly in calendar 18 itself?
Yeah, I mean, the GST is a work in progress, but the economy is adjusting. It's also adjusting and has adjusted to the demonetization. So we see growth gradually increasing into the next fiscal year.
Well, just a word more on history, on the past, and then I would like your estimates of the future. Demonetization. As an economist, how would you assess the costs and the benefits?
Well, the costs were largely temporary. We see permanent and substantial benefits in the form of reducing informality in the economy, integrating people more into efficient payment system, into digital payments. So the benefits are definitely going to be there in the future.
Okay. About the future itself, the other thing that has stymied India's growth this year and even last year has been the twin balance sheet problem, as we call it. Banks riddled with large NPAs, non-performing assets, and several corporates as well, over-leveraged. Do you think we have crossed the hump? How has the NPA resolution looked to you from the outside?
Well, I think the government has taken some very important first steps. The Bankruptcy and Insolvency Code, which has, by the way, prompted the World Bank to raise the doing business score of India significantly. The promised recapitalization, very important, the asset quality review. All of this is critical for getting a handle on the problem and starting to address it. Now, that being said, these are important and difficult first steps, but more needs to be done to complete all of these reforms. See how the Bankruptcy Code works in practice. In terms of the public sector banks, they clearly need more in terms of governance reform. We need to reduce their weight relative to private finance in the financial sector as well.
Well, as you pointed out, the IMF improved India's score in ease of doing business. Primarily, I mean, the big jump was in the area of resolution, which is because of the Bankruptcy Code. What can be another big trigger that can push India up, you think?
Well, I think completing these reforms is a big task, and I think India can do it. But I think if markets see more on the governance front, they'll be very positive. Assessors will be very positive. India's done other very important steps in the area of opening up FDI, and that's had a big payoff for the country.
Well, I don't know, but there was a recent amendment to the bankruptcy code through an ordinance, which doesn't allow owners of NPAs owners of defaulting companies to buy back their companies in the resolution process unless they clear overdues. Do you have any particular view on that?
No, I don't. I mean, I think that's a sort of in the weeds as far as I'm concerned.
Okay. Well, largely that's because the public sector banks found it a moral hazard to write down loans for those they considered responsible for the defaults in the first place. Do you think continuing with too much of public sector banks is a moral hazard?
Well, having a big public sector influence opens the way to non-economic considerations, and this is inevitably going to reduce the efficiency of the system. So it's important to shrink that footprint over time.
What would you want by way of public sector bank reforms? You refer to governance reforms. Is there anything particular that you're looking for?
Independent boards, anything that reduces the non-economic component of decision-making, of credit allocation, allows more competition into the system is going to be a good thing.
Well, let me come to again, the competition between global growth, or at least the juxtaposition of global growth and Indian growth. Normally our exports do well when global trade picks up. And this year, global trade has grown faster than even global GDP. What would you say is the reason that Indian exports have not quite participated?
Again, the general slow growth here relative to trend is going to be a bar to greater participation. Also in India, investment has been relatively weak. We find that investment tends to be more correlated with trade, with imports, with exports. I think that's a factor as well.
So would you say even that's a passing problem?
Again, I think a lot of that will depend on structural reforms going forward. Certainly it's very much tied up with the financial markets, with non-performing loans, with the ability of the banking system to get credit where it's most needed.
Well, there are a lot of people who worry that the Indian rupee has been very strong. Let's not compare it with the dollar, but if you compare it with the yuan, until recently, if you looked at a 12-month period, the rupee has actually appreciated by between 8 and 10%. Do you think a strong rupee is a roadblock to Indian exports doing well?
Well, I think the strong rupee is a function of other macroeconomic policies, in particular fiscal policy. The government has been trying to bring down the level of debt relative to GDP, which is quite high, by gradually reducing the fiscal deficit. That's going to help competitiveness going forward.
What about the fiscal deficit itself? They are supposed to bring it down to 3.2% in the year that ends in March, but there might be a little bit of a slippage. There is a fear that there could be a slippage next year as well. They should have brought it down to 3 by FY19. If there is a bit of a slippage, would that be, overlooked?
Well, I think the government has to be pretty transparent about, why there is a slippage, why the factors are temporary, and what the correction path will be for the deficit. And I think that will be very reassuring. It's certainly not a crisis situation, given that growth remains favorable relative to interest rates, even though the public debt is relatively high. So, small slippages happen, but I think the government has to be very clear about what the ultimate goal is and have a plan for getting there.
Well, a final question on India before I ask your views on the global economy. Even as Indian exporters complain that, or at least some of them complain that the rupee has been strong, there have been some quarters from the United States, some regulatory quarters, who are wondering whether India should be termed a currency manipulator simply because the reserves have grown so much. You have any thoughts on that?
Well, India's reserves are at an all-time high. Yes. But if you look at the sort of standard definitions of currency manipulator. They include large persistent current account surplus. India is certainly not there.
Nowhere near that.
So I don't really see how that charge can be made to stick.